Yep, let's talk prospects now for markets in Europe, because the ECB has certainly become more vocal about the need for more stimulus to hopefully jumpstart the Eurozone economy. So what's happened? Investors have really bought into this theme, which looks to continue. I mean, we're talking here, and this time around it's called the Draghi put. What is it? So as the ECB president explains really the next steps the bank plans to take to stave off deflation, there's confidence or assurance on the part of investors that in turn, he will be providing some sort of floor on asset prices right there. Similar, again, to what we saw back in the U.S. in 2008. Now, if you need proof of this backstop, that it's working, just look at how the increasing gap between stocks in Europe and the currency, the euro. You have a 6-year chart here. Both moved in lockstep for 5 years into the crisis and into last May. But since then, they've gone in opposite directions. Now, I guess another way of looking at this is you look at correlation. That's basically broken down. Now, this line is this graph rather is a measure of just that. A reading of 1 indicates that both stocks and the currency move in tandem. Anything below 0 shows they move in the opposite way. That's changed, and we're now basically looking at 0.3. That's the lowest so far, going all the way back to the global financial crisis. So let's throw this forward. The chief analyst at Danske Bank basically echoing what most are saying. This is good for your stock market investment. I'm quoting him here: the weaker euro will give some support to exporters, and that there are good reasons rather for the stock market to climb higher. We're not talking about recession in Europe anymore, really. Well, I guess it doesn't mean Europe isn't in one. I mean, the past few years has shown that we don't need growth for stocks to go up. But, I mean, look back at the U.S. again and the Bernanke put. But, again, bad news is good news, and that's just how markets have worked over the past few years. That was your Global Outlook for today. I'm David, here in Hong Kong.